So, what is it that you really can write off? Are there really tax secrets? Are there things that the rich is doing that you're missing out on? Here's the thing to know. When you know something, it's no longer a secret. The rich aren't doing anything or have anything available to them that you don't, maybe other than money to do things that are always available to you. So I'm a CPA with 32 years of tax experience working with small business owners and individuals, thousands of them over my career, and I love it. And here's the thing, when I'm talking to also tax professionals, they say, how do we answer this question to our clients, JJ? So it comes down to this. There's a code section. Yeah, don't fall asleep. Okay, don't fall asleep. But what I'm telling you is I'm not making this up. Code section 162 says two things. It needs to be ordinary, necessary to your business, and you need to have intent to spend that money for business purposes. Now, that doesn't mean you can just go wild, wild west, which you may hear on, these other social media platforms. Well, that means you can write off anything. Not the case. But what I tell my clients is this: are you spending it for your business? And when a client says, well, I don't know, I'm like, what? How do you not know? And that's why I'm telling you this. You know what you're spending for business, right? Because you go, well, if I didn't have a business, I wouldn't have done that. If I didn't have a business, I wouldn't have bought that. I wouldn't be spending this money. Now, many would go, well, but I thought there were expenses I could write off because I'm now a business owner. Well, the reason you can now write off expenses because you're a business owner is because you're creating new expenses for your business. And when I say create, I don't mean like we're just trying to find ways to spend money, because here's the thing I want you to remember. I'm visiting with clients all the time. In fact, I'm getting ready to leave right now for a meeting with a client. And one of the things that they asked me last time, and we've been working together a long time, but he's like, how do I zero out my taxes? And I said, here's the deal. You're going to have to spend all your money, and it still may not be enough, because here's the deal. When you spend $1, you're not going to save $1 in tax for a deduction. You're going to save whatever your tax rate is. For most small business owners, call it a third. Could be higher, could be lower, but that dollar might save you 33 cents, but you had to spend $1. Now, I have clients that say, but I'm willing to spend the money because I'd rather spend it on myself or spend it on my business instead of sending it to the IRS. And I say, yeah, I get that, but make sure it's something that you need for your business, that you're spending that's helping you for your business. See, and then here's the deal. If you are going with those two requirements, then sky's the limit, as you're going to hear on other social media platforms. And all I mean is there's not a limit in the dollar amount, but see, you're not going to want to spend all your money because you're a business owner and you're smart. So what you want to do is plan for your taxes. Okay, I made this. Here's my expenses. So I netted this. What's the tax on that? Are there some other things that I can do that is smart for a business owner? What would that be? It's just spending more money on what? Things for your business. Well, help me understand that. And when I talk to a client, it's like, how do you want me to help you know what to spend money on? So let's look at what you spent last year. Let's look at what you spent in years past. Do you need new equipment? Do you need a vehicle that you're actually going to use in your business? Meaning, does your business need for you to have a vehicle, right? You should know these things. So when I'm talking to clients, it's like, you know these things. There are no secrets here. Now, what do the rich do? Not anything what you're being told on social media platforms. And anything that you're being told on social media platforms, while they may be true, the only reason that they're then true is that that rich person has a tax advisor that's working with them in their specific circumstances to know that whatever it is that they're doing actually will hold up in the event of an inquiry from the IRS. Meaning they're ensuring there's business intent. They're ensuring that it's ordinary, necessary for their business. You can't just invent expenses. So I want you to feel comfortable. You're not missing out. You know best your business. When you're talking with your tax advisor and you're saying, hey, what else can I spend money on? The first thing you should be looking at is your check register, your bank statements. What have you been spending money on to predict what you're going to have to spend money on? You don't want to just go out and create a bunch of expenses, because then you don't have money for actual expenses that you need to spend money on, like rent, like payroll. So it's a lot of fun to have a business and make money, and it's not fun to pay taxes. But you know what the most fun is about having a business is net income, okay? It's having net income. There are not tricks of the trade to somehow zero out your liability when you now look at an entire career of a business owner. They might be able to do something, borrow money, buy an asset, so they didn't spend any real money because they just borrowed it. They bought an asset, they depreciated it, boom, they reduced down their income and had a big wallop, saved a bunch of tax. And that makes sense. We would do that. It's all within the law. It's easy. But here's the thing to note. In future years, when somebody's now paying off that loan, the principal payments are not a tax deduction. So in future years, you're spending money on the principal, paying down the loan, and you're not getting to deduct it. So cash is going out the door that you're not able to deduct. So it doesn't mean that you shouldn't buy an asset, doesn't mean you shouldn't borrow. All I'm saying is in the span of it, it all catches up with itself. So big wallop 1 year, great, might make sense, but at the same time, there's times that it go, well, do we want to take regular depreciation over time? And all this means is you've got to get with a tax advisor. Let me tell you this, it's getting harder to find tax advisors. And I'm going to tell you really quick, I'm not for hire because I don't want you to go on to the next video. I am not for hire to do your taxes. But I do have a tax consulting group. Hang on. So there are business owners that are in my group, small tax practitioners in my group. And I have put together a community in this tax consulting group to answer questions directly for you. With all that being said, check it out. Got a link to it. Hopefully you got some great info. Check out my other videos. And then thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a small business owner quite like you, or a tax professional quite like you, and you've never met a CPA quite like me. You have a great one.